Alright, you guys. I am back. And welcome to the greatest show on earth. Hold on, you guys. I'm just trying to set up the chat over here. Hold on. Let's listen into some hype song, a little bit. Hold on, let me do this one right here. Oh, why is it so? There we go. And then if I do, okay, so give me 1 minute here. I might be muting everyone, huh? Hold on, if I mute this one, unmute. Got it. Okay. Let me. Got some songs here. I know it's gonna be copyrighted, but okay, I think you guys could hear it, but I can't. Why? Okay. Oh, it's OG. Okay, we'll get it. Okay, sorry about that. So I found my new monitor, just plugged it in today and looked at let's do the usual pop up over here. So you can see the chat. Looks like nobody's here yet. Okay, so that. Okay. Songs here. Alright, looking good. I am going to restore chat. Huh. Oh, that's dumb. Wonder. Okay. Looking good. How is everybody doing? Okay, so that's good. Okay. So let's get on with the show. You know what? Let me play another song because I am trying to set up my monitor here real quick. And I will be right back. What other song should I play? This one's fine.
There once was a stock that put to sea. The name of the stock was GME. The price blew up and the shorts dipped down. Hold my bully boys, hold. She had not been 2 weeks from shore when Ryan Cohen joined the board. The captain called all hands and swore he'd take his shares and hold. Soon may the penny man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. Soon may the penny man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. One day when the trading is done, we'll take our gains and go. Before the news had hit the market, Wall Street bets came up and bought it. With time in hands, they knew they'd profit if they could only hold. No deals were cut, no shorts were squeezed. The captain's mind was not on greed, but he belonged to the artist creed. He took the risk to hold. Soon may the penny man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. Soon may the penny man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. For 40 days or even more, the stock went up then down once more. All gains were lost, it was looking poor, but still those traders did hold. As far as I've heard, the fight's still on, the short's not squeezed and the gain's not won. The penny man makes his regular call to encourage the captain, crew and all. Soon may the penny man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go. Soon may the penny man come to send a rocket into the sun. One day when the trading is done, we'll take our gains and go.
Time for Under 30. Gamestop ahead of their earnings on Tuesday of next week. So I'd like to welcome in George Tillis, Senior Markets Correspondent for the network. George, short interest in this name has fallen. So that's it. Hey, it's something. I know every time we talk about this name and I call it a meme stock, I get crucified. So I will acknowledge short interest has fallen, but it also has a profitability issue. I mean, there's fundamental flaws with this company ahead of its earnings.
Alright, let's start with that. There is a fundamentally flawed in this market. Oh, in this company, sorry. I'm trying to set this up the way I used to have it. So, for those of you who don't know, I broke my monitor a couple weeks ago. and just haven't had a chance to set another one up because I couldn't find a stand. But guess what? Today I found it, and here we go. Anyway, so yeah, let's address the elephant in the room here. Let's see, what did I title this stream? I don't even know. Sorry, you guys. Very disorganized. Yes. So let's start with, of course, the price point. We know what happened with the price point back in Friday. I don't know what's gonna be. What I'm gonna expect on Monday. Perhaps another downturn, because this is a weekly candle over here. When there's a selling momentum, there's always going to be a kind of a reaction to another downside, right? But this is, again, I'm sure if you're a trader, you probably see that's a, what is it, the three black crow or whatever that pattern is, right? It just means that another downside perhaps is going to ensue. But you know what? Who cares, right? Another one too, perhaps could be seen as a bullish or bearish engulfing candle as well. Although the wick of this particular candle doesn't cover the previous one, so that might not be the good one. But here's another good example of a bearish engulfing candle. No, this is not it. It's supposed to be red. See? Therefore, don't listen to me. Don't listen to what I'm doing here. Let me see. Not a very good trader at all. No wonder I lose money, right? Now, the reason why I said this is just a kind of fun prediction here. Not meant to be taken seriously at all. So what I'm looking for is a bounce off of this particular support, because it seems like the last time when that happened, it bounces off pretty quickly, and it's kind of aligned with the earnings as well. For those of you who haven't known already, GameStop's going to be reporting on this Tuesday, 2 more days. I said two, technically 2.5 days, right? Because today technically is kind of over already. Oh, you know what? I forgot my coffee. You know what? Since nobody's here yet, let me... Is there anyone here yet? Hold on. I might have... do something to my chat here. That's so weird. Let me see. Okay. Alright, I guess not. Okay, let me wait for one more person here. Oh, Uncle Eric's here. Cool. Sorry, Uncle Eric, let me be right back. I am going to play a song. Well, actually, let me play this one. I've shown this one on my other live stream, but I wanted to kind of reiterate something. So let me play this one again. Normal speed. I used to speed it up.
That's the thing. There are still some profitability challenges for GameStop as a company, and there are really some sales challenges. But interesting enough, I'm not surprised to see the short interest start to fall, and I'll explain why in just a sec. But GameStop is still, of course, a core video game retailer, and we know that United States is about 65% of their total sales, and Europe and Australia and Canada is pretty much the remainder. But overall, the business itself seems to be stabilizing, at least from a financial standpoint. But the challenge still is what's going on with typical gaming. Gaming is now digital downloads. There's less demand for retailers like GameStop, but at the same time, they're still a very large company, and they are still generating sales. Now, they're going to be reporting next week, and the anticipated sales number is about $2 billion. Now, that's down considering last year at the same time, for the same quarter, it was about 2.23 billion. But at the same time, they're also estimated to grow their earnings to 25 cents versus 16 cents last year on an adjusted basis. But when you look at the stock, obviously this has been a huge multi-year story, with the stock still, even in the last 5 years, higher by 400%, irrespective of the fact that it's down significantly from the meme hype, pinnacle that it had during that short squeeze event a few years back. But the company, at the end of the day, when you look at this as a retailer, they are expected to continue to show decelerating sales trends, and that's the fundamental problem with GameStop. So, put it into context, now they generated $5.7 billion in the last 4 quarters. If you go forward for the full year this year, they're expected to have sales around $5.5 billion, and next year, 2025, at $5.2 billion. So there's about a 4% deceleration estimate in sales. But while they're doing that, they are essentially cutting back expenses, because out of that $5.7 billion in sales that they generated, their operating loss was about $64 million, and their net loss was only about $8 million. So they're cutting expenses while sales are decelerating, but they're still positive. So the growth rate is the challenge for GameStop, not a balance sheet issue, because if we saw a balance sheet issue, which we can correlate to perhaps another one that went bankrupt, Bed Bath & Beyond, we talked about that company, where it showed decelerating sales trends, but it was structurally unprofitable with a massive hole in its balance sheet with too much debt. That's not the case here for GameStop. If you look at their balance sheet, they have about $1.2 billion in cash, about $1 billion in inventory, $700 and so million in assets, including some company-owned stores and real estate, and their total liabilities, including debt and of course taxes and other forms of liability, is only about $1.8 billion. So they have a positive enterprise value, and I think that's one of the reasons why the GameStop as a stock continues to stick around. It's not necessarily as bad as one would consider comparing to other retailers that have gone bankrupt. This is a story of a stock that is shoring up its cash position, mitigating losses, but still doesn't have a plan to deal with sales decline.
George, where's the turnaround story come into play here, right? Because, okay, so that financial narrative is sustainable, it seems like, and could be worse, right? But that's not enough to get you excited about the stock. As you mentioned, it's still kind of struggling at these lower levels here. I mean, even leg warmers, I feel like, made a turnaround, right? Where does GameStop come into play?
So this type of, interviewer, reporter, or whatever, right? They have to throw that negativity onto it. It's like as if comparing, it's a joke. It's like, oh yeah, they're doing great, but it's like, really? Great, but really? Well, how about they've been improving since then? Remember, these type of network, 4 months ago, even a year ago, what did they say about GameStop? Oh, GameStop would never, ever get to this point. They cannot cut the amount of store that they have and still stay afloat, or still become profitable, right? Now, you could argue, because currently, if you have the current data, right now, you could argue, well, they're not profitable. Well, only $8 million. They're about to post another quarters of earnings, right? We already end the quarter, but we just need to see the number, right? And so, of course, people who are smarter than me, who have, the ability to kind of calculate what GameStop is going to do, is saying that, well, even the Wall Street out there, right, estimating that GameStop's going to earn 30 cents a share. When it used to be what, zero? It used to be negative. Now it's 30 cents per share. So if GameStop is doing such a terrible job, or GameStop, I mean, like the leadership is doing such a terrible job, why did the estimate of this company going up, right? Positive. Like arguably, right? Because last year they were doing 16 cents in reporting share, right? In the reported whatever. And the estimate was negative, right? So now the sentiment is kind of going the other way. So if they're not really improving, like the guy was saying, or the improvement of the company is nothing to talk about, or nothing to be excited about, so to speak, then why the estimate is so high the other way? You see how the difference between the estimate from last year? Wait, hold on, sorry, not this one. The estimate from last year was negative 13 cents, okay? Right? Now, their estimate from Wall Street, right, the toughest person to beat, is 30 cents per share. So can GameStop beat that? I think we can, maybe a little bit higher than 30 cents, perhaps 33 cents per share. And let's see how the price would do. Right, now, let me preface this ahead of time. Just because the company is doing better doesn't mean the price is going to appreciate, because there's so many negative sentiments out there that it's going to dampen the price action. But here's the thing. If you are a trader versus investor, right, you are going to have this different timeline. So as a trader, this company is going to attract more volume, right, during earning times. Like it's us right here, even right here. There's hardly any volume during this earnings time. Hardly any volume, right? Hardly any volume. But now that there's about to post profitability for the first time in 7 years, or at least profitability in terms of net income, right? Positive. We'll see how the volume's gonna look like for this particular company. To me, this is a successful turnaround company, right? Successfully have turned around, and we're about to, think about those challenge that these people are telling you that they haven't been doing so far, which is the top line revenue, right? Top line revenue, you could fix it later on when the economy is doing better, when everything else, back to normal, so to speak, right? Interest rate is lower and all that stuff. But right now, again, everybody is struggling. Retail is struggling. In comparison, if you look at the decline for GameStop, it's actually only 4% consistently. Like, compared to what? What are you trying to compare to? How about Target, right? Hold on, I think if I compare Target... Goodness gracious. Sorry, Uncle Eric, I'll read your comment in a minute. Give me 1 second. Keep forgetting to do this off screen here. Target. Let's look at Target real quick. Of course, like every retailer out there, and of course this is a different type of retail, but at least it's in the retail sector, has been declined. I bet you anything if you look at the finance. Oh, okay. All right. That was a terrible analogy there. Units of sale, maybe they've been able to hike up the price so that it's not as bad. All right, well, technically they're not as bad. Seems like net income went up. That's for Target. How come the news saying like retail has been kind of decimated? Okay, so it seems like they've been able to do pretty well with cash flow positive. Wait, am I looking at the right Target here? Yeah, this is Target. Okay, so last year they did $4 billion. Why are they so... Okay, very low P ratio. That's good. Institution own 80%. Pretty saturated already, in my opinion, obviously. Okay, Well, at least there's no imminent death over here. Oh, okay, so a lot of debt. Net cash balance is negative. Working capital is negative. Okay, free cash flow, at least that's good. CapEx pretty high for the company. So the only immediate, for particularly this particular company is the net cash negative. Net cash is an indicator of financial position of the company. It calculates. So the financial position of the company is not really good, right? Compared to GameStop, obviously, it's a little bit different company. GameStop is a lot smaller. I guess able to kind of cut when it needs to cut. So they have more flexibility here. All right. Hello, everybody. Sorry, Uncle Eric. Okay, let me see. So what do you think is a fair PE ratio? Try to evaluate it as a value company. Uncle Eric, you probably are more knowledgeable about that than me. To me, of course, like if you look at the, let's see, like comparing to other retails, like Target is what trading at right now, 18. I mean, traditionally 10 is like too high already, right? So PE ratio means that that's 18 times, right? 18 times its earning, right? So that means if you put $1 in, it takes the company 18. No, sorry, I should say. I'm trying to explain it so that it's easier to understand. It takes the company 18 years to get to the price of the market cap. I think that's what yeah. So it takes the company 18 years for Target right now at the current, net income, right? And so again, assuming there's a lot of assumption here that the company will continue to do that. And PE ratio, of course, fluctuate as the company grows, as the company, whatever. So currently, if you look at the GameStop right here, I don't know. I mean, it would be amazing to be at around 20, right? Around 20, around 10 to 20. That would be a good one. It's tough for GameStop currently because, again, there's no real data to go by on how to evaluate this particular leadership because, again, the leadership just got here 3 years ago, right? And people don't give him enough credit for that because, again, like the company has been kind of like in the negative sentiment for a long time, and so it's really hard to do that. And so I'm willing to just wait to see more data so that I could, kind of evaluate this company correctly in terms of like how much growth is going to happen and all that stuff. But it's very difficult to do that when the company has the net income of negative, right? Not by much, obviously. Let me reiterate that. It's only $8 million so far, and it's going to be turning positive soon. So even at the 90 forward PE ratio, that's high, yes. But people overvaluate company all the time. But as far as like a true value of this company is yet remains to be seen. I mean, I could kind of go by the book value, and if you look at GameStop, Target book value right here. It's like, so what is that? 29, right? $29 a share. What is the share right now? So, divided by, wait, is at 17% of the share price. Okay. So if you do the same thing for GameStop right now, at $4.16 divided by the current price, which is this one right here. I don't know if this is the right way. If this is the right way to do that, but yeah. It's 30% of the book value versus the price. So 30% equity into the market versus 17% to the market. So technically double that if it's trading anywhere near where the valuation of Target versus GameStop. So double, I would say. But again, like it's really hard to get that right. But thank you for the question, though. Well, wait. Who cares about these estimates? The question is how we'll do the next 5 years. I think they're doing great. They will do fine. Like again, like they're not gonna make a gazillions of dollars right away. Yes, they need some. There's some challenges ahead of the company, but this is where the opportunity lies, right? I mean, Amazon had to build the infrastructure that is needed to be Amazon today, right? And so give the guy a little bit of time. I think 5, 6, even 7 more years, that would be a good assessment on things, on whether this guy is going to be successful. But if you just take the last 3 years already, I bet you anything, he is successful already. Not many people will give him enough credit yet because the news want you to be late into the game, right? Now, this segment right here that I just showed you, it should have been 1 year ago. You know why? Because GameStop was posting cash flow positive, right? A year ago on a trailing 12. So again, it just shows the financial position of GameStop at that time, that they were in the plus, right? Improvement. So this sentiment right here should be a year ago. But now they just beginning to question, okay, balance sheet seems fine and all that stuff, right? Like I said in my last live stream, I bet you anything, if the institution owned most of this company, they would pump it like crazy right now, because we're about to post a net positive. And so just that alone, you know that this is the game that is being played on this particular stock. If you factor in short interest of less than 20, where did you get that from? It's interesting, but the fundamental... fundamentally, this estimate is just meh. Okay. Short interest right now is around 22%. So, not less than, but meh, that's fine. But the catalyst is now the fact that GameStop is profitable from now on. So how is that pan out for most people? I'm sure traders love to trade these type of news, right? And there are institutional kind of people that are looking for those metric to play out, right? Those big guys out there that we're waiting for them to kind of move the market for this particular company, they're not going to just sit on the sideline, right? While GameStop is going to be profitable, like, and they're not going to be late in the game, like you and I, right? And this is why they're a concerted effort to try to poop and scoop this company. I really believe that, Okay, you want to try to look at as a value investor and then try to estimate fair value. A amount and forward. What is this? ATM value ATM. as it grows isn't a factor right now. Well then, okay. Rather, how little will it decline instead? With top line revenue growth, it is to, I like to look at GME from two perspectives, okay? Value plus high DRS, high short interest, okay? Value is complicated, but high DRS, high interest, short interest should put at $4 billion, okay? 4 billion. If you compare it to Target with other retailer, and therefore looking at GameStop as another retailer, seems fair. Okay. All right. So forward looking, GameStop is great, but it's is exactly, wait, actually move. Am I not know how to read this? Exact moment, it's weird. But in this exact moment, it's weird. Why would it be weird? Yes, but Target is okay. Different legacy. Different league. True. I mean, the reason why I compare it to, you know, a highly established, quote unquote, brand already is because, again, it's been around for a while. More data to be had, right? But the problem with these big corporation is that they have massive amount of debt, right? What's happening right now with the rates and all that stuff, right? Mostly commercial real estate and all that stuff, they are decreasing in value for the last 6 months, right? And so if they have any asset whatsoever, if they have any debt whatsoever, if they're forced to sell some of those assets in order to, you know, keep the, like, thank goodness they have some cash here. But if, again, like, high operation cost right here is going to be the death of them, see? Operating expenses, $23.9 billion. That's a problem, in my opinion, right? And so they're least likely to survive the downturn, right? You've heard of Dollar General, Dollar Trees, closing store, Dollar Tree, right? Like the cheapest retailer, you know, items, a company that sell cheap stuff, right? Technically, you should not have, if the economy is doing a lot better or just a little bit worse, it wouldn't be like this, right? And so it's a problem here for the big company out there to try to stay afloat. My point is that, you know, GameStop has been doing that 3 years ago so that they don't have to, you know, shave so much of the cost currently to try to stay afloat. So while people are stampeding to close stores right now, when they should have been doing it 3 years ago, like GameStop, right? They're least likely to take advantage of this downturn, right? And to me, the value comes from the fact that GameStop has that ability to be flexible, right? So again, that's just an added value. It's still speculative at this point in time because I'm not Ryan Cohen. I don't know what he's going to spend that money on. But I trust that he's going to, you know, treat the company's money as if it's his own, right? So he's been doing it so far, in my opinion, right? If you look at the cash position, you know, it's not like it's depleting to the point where it's like alarming whatsoever, right? In fact, it's actually increasing in cash position year on year. You know, if you look at that, that's like it's a signal that the leadership is trying to, you know, survive and also thrive during this hard time, in my opinion. If GameStop can increase book to 2 per year, it's great. Yes, okay. Yeah, I think we could do that, honestly. I mean, $200 million a year is a low ballpark for GameStop to make from now on, right? Think about like the inflationary accounting as well, right? Like I said, I bring this stuff up time and time again too. Currently, it's $13. That's less than one lunch, like Big Mac. Big Mac meal, right? Can you get Big Mac meal now at $13? Good luck. It's like, it's ridiculous. So inflation alone will evaluate this company a lot higher now, right? And on top of that, the cost of doing business going lower because they're going e-commerce. More than 20%. Yes, profitable, but will come in a very high PE ratio. Yes, but it's still an improvement from the last 3 years, right? At one point in time, freaking Tesla, it's like PE ratio is like through the roof, right? But people are still flocking in and buying in anyway. Look at PE ratio of Nvidia. Like, speaking of absurd valuation here, I've talked about this company, Nvidia corporate, right? But again, I'm comparing apple to orange here. It's different company, different margin. Profit margin, so to speak. But if you look at the PE ratio of this company currently, right now, right? But the forward one, meaning like people projecting that it should be half of this price. But who's pumping this to you? The news, right? There you go. CEO blasting. These type of news, kind of elicit people to think that, oh, it's going higher. Famously, there was a Fidelity guy came in and like investing in it. But if you look at the forecast for Nvidia, obviously they're trying to get it to $1,200 right there. Strong buy, really? Do you really want to buy into this company at this valuation, right? I mean, to me, that's obvious. Like, you're buying at the top, and the geniuses out there, they want you to buy into that. So that's why I usually do the opposite of what these people are trying to let me to do. Remember, these analysts, they are paid to do that, right? Or they have their own biases, right? I have my own biases too, right? So just do the best you can to come out with your own conclusion here. But every single one want you to buy into this. Again, this is a big club and you're not in it, type thing, right? They will sell it out to whoever the highest bidder is, right? And so to gain that influences on you, to gain that massive following, in order to, what? This is called exit liquidity for the guys up top, okay? Jeff Bezos already X out of his, position in Amazon. Not completely, obviously, he has more shares, but at least he sold to the tune of $10 billion so far, right, of his Amazon share. So that means something, I hope. Sorry, I'm chatting with you as you are speaking, but you are reading after. I'm so sorry. Okay, yes, absurd. It's fine when you have a growth factor in calculation. Doesn't. Okay. I mean, again, like, growth factors comes after the balance sheet is stable, Wouldn't you agree with that, right? It's in the future. And again, like this is my frustration about the news media covering GameStop is that they don't tend to look forward for GameStop. They rather think of GameStop as a company that was 12 years ago, 10 years ago, right? And that's not fair because every single other case in point, company out there, when the media are pumping up to you, they always said, oh, they're gonna do this, oh, they're gonna do that, right? Without looking at who's buying into this company, right? And I saw a guy who, I don't know if you've known this guy before. I think Nobody Special. I might spell special wrong. Nobody special. Finance, I think that's the guy. He did a segment about, or many segments about NVIDIA, kind of like do a circular finance, meaning that they fund a company that will buy their chips from them. Like Weave Core over here, look.
This guy is Martin Shkreli. Now, you may remember him from a few years ago where he became known as Pharma Bro and also as the most hated man in America, or perhaps you know him by his lesser-known moniker, Federal Inmate Number 87850-053. You see, little Marty here was sentenced to 7 years in federal prison after being convicted on multiple counts of securities fraud. He's banned for life from working in any capacity in the pharmaceutical industry. He's also banned for life from ever running any publicly traded company. And now he wants you to know that he is a CoreWeave customer and that he thinks I'm an idiot for being suspicious of that company. What's up, guys? I'm Nobody Special, and for several months now, I've been making videos that are very critical of the AI mania that's been going on in the stock market. As NVIDIA stock has rallied hundreds of dollars currently as of the making of this video, pushing almost $1,000 a share, I've been drawing attention to the fact that there's some very creative accounting going on at that company. In particular, something known as round tripping, where NVIDIA makes strategic investments in a company like CoreWeave, and then CoreWeave turns around and takes that same money and hands it right back to NVIDIA to buy their chips. And so it's really just NVIDIA's money going around in circles, but it looks like organic revenue growth. And when I started looking into CoreWeave, I found some very suspicious things, like the involvement of Magnetar Capital, who has a history of creating sabotaged investments, selling them to unsuspecting retail investors while simultaneously betting against them. I also found some suspicious thing in the background of CoreWeave's founders, who have no background in data centers, but they do have a background in things like hedge funds and cryptocurrency, and most suspiciously in running carbon credits through shell companies in the Cayman Islands, in something that's eerily similar to a scheme known as transfer mispricing, which Interpol has highlighted as being a risk for tax evasion and money laundering.
Yeah, so I know you said here, stop comparing NVIDIA to GameStop. I get it, look, it's completely evaluation, like different evaluation because of the growth factor of things. But what I'm trying to tell you is that the valuation could be grossly, and even factoring in the growth aspect of thing, it's overvaluated, right? You can't expect this growth to happen infinitively. I can't even say the word. Like go on forever and ever. Like the growth factor of this, like it's insanity, right? It's like hockey stick. And who could maintain that without doing this shenanigans of circling financing deals from companies like this, And eventually it's gonna stop. The buck's gonna stop somewhere, and who's gonna keep this evaluation at this price right now? Like, it's ridiculous to say that it's gonna keep going up to a $10 trillion company. You really think that? And again, like if those chips, you have to sell it at a certain price, right? It's like, do you think you could increase that? Let's say you have like currently they have like a $200,000 chip. Okay, who has $250,000 chip money to buy a $250,000 chip? Like, only big companies out there, right? I mean, the mega corporation here or the government. Okay, but here's the thing. The rest of us don't have that type of money. Small businesses out there don't have that type of money to do that. And so eventually it's going to come crashing down. That's my point. Overvaluation, right? But this company, it's not. It's like at fair value right now, just like you said. $4 billion, it's fair for GameStop. Okay, let's see how long can it stay in a fair value until it's being overvaluated, right? And when it's being overvaluated, let's see how many people will stampeding into this company, right? Accounting for the short interest and all that stuff, right? And again, that's the value added in that sense. If you want to look at the growth factor of things, yes, retail grow slowly, just like Amazon, just like, but eventually it's gonna be a hockey stick again, right? Because the growth, even though it's slow, and this is where you want to be, this is how you want to invest. You want to detect the trend earlier than most people. And so that's another value that you might not see there. But yeah, in 5-10 years from now, people are going to be like, oh, what? GameStop is at $100. Why? Well, because people have been accumulating this company and hold and see the valuation of it, and then, and then you move from there. Like incremental, small little changes could add up to hundreds of millions of dollars, right? And if you look at the gross profit margin, it's going up slowly as well. Meaning that the leadership has been able to smooth out, whatever challenges that they have dealt with for 3 years, right? So now we're at the end of it. New beginning, so to speak. So how long do you want me to wait until then to accumulate into this company? So in my opinion, it is a good opportunity. But again, do your own research. You seem smart, be more. The rule is don't simplify when looking at these kinds of stuff. Okay. Exit liquidity and Jeff Bezos selling at the top. Sounds like someone who had no idea what they actually saying. Huh? Max 7 company are buying the chip. That's basically why has pumped. Okay. So you're telling me that maximum, where is the like all of the Max 7? Have you looked at Kathy Wood analysis of that? This is going to be Cisco in the bubble, right? Cisco, like they will never see this valuation again. Watch. In a couple months, they're going to be doing that, right? Yes, these companies going to spend money to buy that. But again, who's going to spend money into the Max 7, right, when people are struggling to even put food on the table? Have you heard about like 30% of people's income is going to rent? It's like, and more percentage of their income going to food, shelter, the essential needs of things, right? And so, yes, if you own business, great. But how many people are actually owning business and able to, profit off of that? And in order for you to, get that money back, or the Max 7 getting that money back, two things, right? People would have to be more and more interacting with those type of platform and all that stuff, right? And eventually it's going to come crashing down anyway, because if Nvidia, couldn't make, like right now, sure, they are the monopoly over here, but AMD's probably could catch up to them a lot quicker, because they're just right second, like close second over here. And so as far as like Nvidia go, the company is crazy, in my opinion, right? Hey, you seem smart too, so appreciate that. 2T seems fair. What is 2T? 2 times, you mean? I don't like the term of evaluation. 2 trillion? Okay, 2 trillion seems fair. I doubt it that you think that, actually. Come on, you're smarter than that. I think, hold on. Let me see. Okay. The problem is that can they sustain this right here, right? Can they sustain that? So $30 billion last year. Can they sustain that for next year and then the next year after that? In 5 years, you'll see that this company, well, I would wager in this coming year, you're gonna see the price dramatically decreasing. Because you cannot have this sustained growth rate like this. Like, this is madness, okay? And company of this size, come on. You're smarter than that. You think that they could, like, 5x their net income from here? You're crazy to think that, right? And where is the material to use to, make 5x the income of this too? Like, insanity. Either the material has to catch up to it, like the raw material, right? You need those. And then also too, you have to increase price to, instead of $200,000 chip, now it has to be $1 million chip, right? Okay. Good luck, try to buy that. And you think the Max 7 would buy it from NVIDIA at $1 million when they could buy it at AMD at half the price or even lower? Come on. It's ridiculous. So no, 2 trillion, no, not at all. Right, you can't predict, just like how it is in GameStop. You cannot predict future demand, right? You can't. So if you apply that to NVIDIA, I don't see how you couldn't apply that same sentiment to GameStop. And that's the opportunity that I don't think you want people to realize, perhaps, right? But I'm here for a slow, sure, incremental company, small enough to withstand this downturn, right? And big enough to not sweep under the rug, right? Of bankruptcy, right? And then the fact that no debt too in this environment, that's immensely opportunist. Like a good opportunity to be in GameStop right now, in my opinion. I mean, I would, let's see, the possibility of me 10x my money in GameStop versus 10x my money in NVIDIA right now. If you have to bet, like, who would 10x? which one has the highest probability, right? So if it's a probability, like if you had to bet, right? Let's just gamble over here, right? Let's see. Who do you think would go 10x, more likely to go 10x from here in 5 years versus, okay, you need 10% change for it to be hundreds of $1 million. That's why a company like Target is different, where 1%, 10% change. What you mean, like the revenue growth? Could be $100 million. Okay. To have an opinion on this sorts of technical stuff, you should really be an expert on semiconductor, etc. But like Sam Altman estimated a seed of 2.2 to build a chip factory to meet. Okay, yes, but you need $10 trillion, right? That's the highest. let's go, like Sam Altman said, okay, we need $10 trillion. Okay, who have that $10 trillion to spend? Yes, the government, but who, like, it's ridiculous, right? But what are those chip factory would do? I know, like warfare, sure, government would try to get those things. But by that time, there'll probably be nuclear war and nobody's going to exist in this world anyway. And then, cost of living is going to go higher, even though there's technology to simplify people's lives here. But they don't. It's like $10 trillion is a massive amount of money to, if you do the freaking math, it's like, what is an average household income? I think it's like $50,000 now, right? It's, I don't know. Like, the number just doesn't make any sense at all. But we have $34 trillion in debt. That's another, burden of people who have to come here and paying more taxes, right? So again, like, either we have to be a third world country that I don't know. I can't even fathom that. You think you know something? Again, to me, this is a hype, right? Oh, we could build a $10 trillion, and we could, technically have a $7 trillion chip company. Okay, well, we think about that too when PetSmart or Pet.com was what, $100 million at IPO and all that stuff back in the dot-com bubble. In my opinion, these type of news is meant to pump this up. That's it. I'm not saying that maybe in 20 years you would see this in 20 years, but not right now. Not right now, not at this second. You don't have the infrastructure to do that yet, right? And how long can you make a factory? It's like, remember when we had the Taiwan chip factory being made? Currently, where is it now? Like, are we producing chips right now? That was 4 years ago. No, we're not producing chip here. Intel got a whole bunch of money from the government to place their factory here. Where is it? It takes time to build those factories. That's what I'm trying to tell you. So, yes, in 10, 20 years, this might be true. Currently, no. Nope. So I'd rather, GameStop is the current right investment, in my opinion. Okay, let's listen into this one.
Okay, so that's a good question, Ben. I can't tell you the answer to that question. Obviously, once leases, which are part of their liabilities, maybe expire, they'll start closing down some of those stores and not re-up their leases. I see a business that's probably going to still contract in terms of the size and scale of their balance sheet. But, for all we know, based upon, the institutional ownership and the insider ownership, they may end up turning the company into a holding company in some capacity because, that cash is worth a lot, and that cash could certainly be deployed. Maybe not in the sense of deploying it to expand their existing operations. Maybe it's deployed as a holding company or an investment company. I can't say if that's going to be the case, but it's certainly a consideration. But at the same time, with their existing operations, you have to think about what they could do to their current retail stores to improve revenue growth. Could they transform them into some sort of, gaming lounge place where people go to socialize? I can't say if that is what they have plans to do, but they still have infrastructure, they still have a good balance sheet. They just have to deal with the sales decline. So I'm not a turnaround expert. All I can tell you is that looking at the trend, obviously the stock is down 45% over the last year, but it's starting to find some bottoming action, not because sales are flat, they're still in decline, but their operating expenses are coming down faster than the sales are declining, and they're raising cash. So you may end up seeing a stock that does nothing, for lack of a better word, for quite some time as they try to figure out how to reconvert their business.
So there's he was saying the possibility of GameStop being a holding company. We've known that since the last earnings report. Now they're just starting to like push it to the mass. So this is why I'm saying to you, it's like there is a concerted effort for you to be late into the game, right? And so this is, again, the frustration is that for GameStop, they want you to look back. Oh, look, there used to be a terrible company. But when it comes to other stocks, they forward leading it. Like, oh, NVIDIA is going to make tons of trillions and trillions of dollars in the next 6 months. Like, ridiculous, right? Again, like, there is a sentiment hype over here that you shouldn't be like, again, to me, that's the trick that they do, is to overhype something that they're in for already, for the exit liquidity, whatever. Like, I bet you anything, look, the institution ownership is probably massive, see? Like, it's classic. That's all you need to indicate that the reason why the company is being pumped is because institutional ownership, right? Versus GameStop, if you look at the GameStop, 20. And this is where Peter Lynch was the one who kind of like, if you look at his stock pick analysis or how to pick a valuable stock, is that if you could find a company that has low institutional ownership, right, and high inside buyers that are not selling, they keep buying the stock, right, that's 2 points already. And then on top of that, you have a successful turnaround company. What is a successful turnaround company? It's a company that has been, doing everything they can, which what Ryan Cohen has been doing for 3 years already, right? Cutting down store, cutting down hours, massaging whatever needs to be done in order to not be too much of a shock to the system. If you cut down half of the store in one go, you're going to shock the system. So that's why it's incremental, year on year, right? And I'm sure we're going to continue to cut, right? We already know about the York distributing center being closed, which is good, right? But hopefully the revenue is not going to be too low. I hope it's not below $2 billion. It's going to be a carnage for this stock price, if that's the case, because they're going to run with that narrative of 4% decline in revenue. So that's the only thing I'm kind of nervous about. It's the top line revenue. But the only thing that I'm not nervous about is seeing the growth profit going to be declining slowly, even slower. And if not flat, that would be amazing as well. So all in all, it's a good company. Uncle Eric, you could be more. I just pushing some discussion. Okay, thank you. Appreciate that. Okay, so you like GameStop as well. That's fine. I mean, whether you like it or not, it's really not my problem. To me, I think it's good that you push discussion. That's amazing. I appreciate that. But anytime I argue with people about NVIDIA, it just frustrates me to no end that the media is doing this. It's not you. I know that. It's this stuff about Sam Altman was pushed like a couple weeks ago or even a month ago, about how he's going to build a factory for that, or he sees the $7 trillion chip factory or something like that. But again, like, there's a reason why they push those segments to the masses, right? For you to have that sentiment that you shouldn't have right now at the moment. Anytime they do that, they are leading it to like 20 years from now here, right? Planning ahead of time. by that time, 20 years from now, GME is going to be Amazon already, right? In my opinion, right? A girl could dream. If people could value Nvidia to this max, I can't see why GameStop wouldn't be overvalued to that max either, right? So there's so many value to invest in GameStop at this moment in time. Obviously, if I have more money, I would put more into this. But hey, I'm biased in that sense, so do not listen to me, please. Just be cautious. Now, as far as like people going into, hold on, let me finish this video real quick.
Want to check that out? I'm not going to read the whole thing here, but apparently after I went to bed last night, Farmer Bro here wasn't done, and he went on a nearly 6-hour Twitter Spaces rant about what an idiot I am and what a wonderful company that CoreWeave is. Now, I didn't listen to the whole thing, but I did catch a few clips, such as this little gem.
Let's keep asking this idiot to come in, JG Nuke. Try to teach him something. I'm challenging this guy to come in here and so I could slap the shit out of him in front of all of you people.
That is some awful strong language from a man who cried at his sentencing hearing after begging the judge to have mercy on him. So long story short, Scammy Alfalfa here, who's just another in a long line of fraudsters and crooks who are trying to make money off of the AI mania, has stepped forward to act as a character witness on behalf of CoreWeave. I'm sure CoreWeave just loves that. And don't for a second think that this creep has changed his ways. In just a year and a half since he's been released from prison, he's already violated his probation at least once when he left the state to appear on Tucker Carlson. And the FTC has asked a federal judge to hold him in contempt of court because his company DL Software, the DL stands for drug-like, runs algorithms to help with the discovery of new pharmaceuticals. And remember, he has a lifetime ban from working in any capacity in the pharmaceutical industry, so it seems like this guy is on a mission to get himself thrown back in the slammer. He also ran a crypto scam called Martin Shkreli Inu, where, good for him, he made enough money.
I remember that coin, yeah. I didn't buy into it, but of course, I know that this guy is kind of like a scammy guy. But also, too, I remember he was talking or had a video about AMC, too. Hold on, let me see if I... recently, though, I know he was pumping it. Okay, 8 days ago, obviously. So again, like he's being paid to do this. I'm not saying he's not knowledgeable about this. I'm not saying that at all. But to say that somehow AMC, Uncle Eric, I don't know if you're still here. If you are, what do you think of AMC?
Live stream.
Let me see.
Other theater. Okay. Still trying to get my head around. There it is. All right. This call at 9 o'clock will be really entertaining. I hope you guys. I don't know anything about the carbon market. Sorry. Did I never do the CFFF?
Who's in Hollywood Compass? In theatrical exhibition? Dwayne Johnson, Pierce Brosnan, and Viola Davis.
I don't know if he said anything. I haven't watched this one, so that's why.
Full sight and sound experiences that are found at our premium large format offerings, such as IMAX, Dolby Cinema, and AMC Prime. Premium large format attendance represented 15.6% of domestic attendance in Q2, and this can be compared to 10.9% in the second quarter of 2019. 10% second means enabled secure notes that are due in 2026. We did this research for approximately 50 minutes.
He didn't run the shitcoin, and he's a gifted person with a lot of potential. Don't judge quick because of the type of stuff. I'm not saying that he's not gifted. I just think that he uses gift to do some, like, to mislead people into a lot of things that it shouldn't be. You know, he's have a good brain. I'm not saying that he's not. You know, to have the ability to run into any company or anything at all, you have some skill. But what are you using that skill to do? You know, if it's not to help other people. And I'm sure, again, people who love and hate so many different things, different people. You know, I'm sure there are big fans of him out there. That saying that he shouldn't shouldn't be punished the way that he was. But I disagree, you know. I just don't like the type of the CEO that he was. In that, you know, the reason why he was called a farmer boy, a bro or whatever, was because he was hiking the price of some life-saving medication for most people. So that hurts a lot of people, right? Yes, it's within his reason or rights to do that as a CEO. But really, do you really need that much profit to do that? And if you buy into a company that has to do that to people, then what is that company? Like, why not just file for bankruptcy already? I know the company lose money and all that stuff at the time. I think I saw a snippet of him kind of explaining why he did it, or he had to raise those medication to that extent. But why that particular one and not across the board, you know? Perhaps that's the biggest one where, you know, has the most population to buy into that particular drug and all that stuff. But again, I just don't like his ethical way of doing business, right? Or his ethic of doing business. So it's what pulled me into the stock market, unfortunately. Okay. Do you still hold AMC? I was following Martin during everything that went down, and it was way more complicated than Farmer Boy hiking. Okay. I also think it was good he was putting in prison, but everyone has this skewed opinion now. I know, like, I don't know this guy personally, you know. I'm sure if I'm his family member, I probably would think differently of him. But, you know, on the surface, obviously, that's all I could, you know, say about this particular guy. But again, like, you know, when you have involvement in this type of thing, and this is another thing too, I think he's doing, hold on, he's doing this for another pump of AMC, right? In my opinion, obviously, again, AMC is always used in tandems with GME in order to pump AMC up. We all know what AMC is, you guys. Like, if you watch Moran's Rand's you know, channel, or been in Moran's Rand's live stream every, like, 3 years ago and all that stuff, we all know that AMC is private equity, right? The very people that is trying to bet against any company whatsoever, right? And it's a way for them to rinse and repeat by taking company private and then rinse and repeat, sell out certain asset and then just pump it, like re-IPO it in order to get money from the public, right? So the company is not meant to make people's money because of the debt and all that stuff. And so when AMC filed for bankruptcy, the shareholder equity will be wiped out, right? And so, but they're going to be able to kill two birds with one stone in terms of, like, the shorters here. I'm talking about the perspective of the shorter. They would say AMC is the same as GME, right? That's why there's people, you know, who...
Interest rates have gone up. They should have refinanced earlier.
Hold on. I'm trying to listen to him. He hasn't said anything yet about AMC, so that's why I'm kind of see if he's gonna say something about AMC here in a minute. So to me, again, this is just a ploy to distract from
spending too much money on G&A and stuff.
the real company, which is GME,
Makes me not
right?
trust the CEO.
And then take the movement, kind of hijack the movement, saying that AMC is going to be better than GME. You know, you still have people who are still believing in that, right? And my heart goes out to people who are all into AMC rather than GME, thinking that they're the same thing. It's going to run the same, it's going to do the same thing. When time and time again, Adam Aarons has been screwing people over based on his action, right? Doesn't matter what he says, it's what he's doing to the balance sheets, to the company's money, right? And then in the meantime, you have a CEO who's trying to do everything he can, you know, to increase shareholder equity or value in this company right here, including taking no pay, no salary, because again, company hasn't made money yet. So I think that's a good ethical way to do thing, right? He's not scrambling for cash personally. So, you know, he as a billionaire himself, he's doing just fine, right? And so the fact that he took this on, you know, without any financial compensation, I know like people, oh, he has stock option or whatever. Well, not right now at the moment because the company hasn't made money yet. So I think that's only fair. And on top of that, he has a big stake in this company to make it more successful than it is today, right? So I'm glad that I get to invest alongside him. Now you could argue that, oh, why are they cutting benefit for people? Well, I mean, Amazon has been doing that for decades. How come nobody up in arm about it, right? Amazon has been kind of screwing over vendor who've been selling on their platform. How come nobody go up in arm about that? If you have any publication with Amazon at you know, before this, like a couple years ago or even 10 years ago, you'd be like, you know, being screwed over by Amazon because your profit margin is like really low, because if you don't want to put on Amazon, they're going to promote other there's a segment on it. So, but anyway, I'm still listening in on this one. I haven't heard anything yet.
Have to be just kind of like, you know, reasonable. So yeah, we look at the box office number.
Okay, let me see. Okay, he's
Everybody's looking
talking.
at box office pro now. Was it this? Let me see. Yeah, I think it was this. This was what everybody was looking at, and they're saying, "Oh, this is. Look at this. This is why AMC is going to do so poorly." And it wasn't that bad. Revenue was okay. So let's see here. Q2 cumulative gross. Q2 20. Right. So let's have gone. Right. So let's see. 2322. 682. So that's domestic box office for US. I mean, that's what domestic is, right? Yeah, domestic. Okay, cool. Q1. Yeah, it's pretty good. All right, and now Q4. That was for 21, right? 2067, 228086. See, that's the interesting thing. Q2's box office according to this website was better than Q4, but AMC's revenue was less than Q4. So that's a little strange. And you can see how like the theatrical releases impact everything. And I guess Q1 there was some pandemic fear, so like Q1 I think traffic was low, but it's probably low cyclically anyway. It's winter after all. The summer's supposed to be right, the big summer and the holidays maybe are supposed to be the big movie quarters. I'm still figuring this out. Let's see. Q2 21 is definitely all pandemic, right? Nothing was worse than 2020. Oof. I mean, it's impressive they survived this, but the question is, what is this worth now that the pandemic is largely over? I mean, I don't go to the movies because I don't want to get monkeypox, but that's a whole other story.
Okay, let me see. 1 second here. I'm looking at AMC here. Okay, yeah. Profit margin is really low. This is AMC. Lower. There we go. Okay, let me go back here.
To be motivated. If you're not motivated, I mean, it's your life. It's not my life. If you're not motivated about your own life, I don't know what to tell you, bro. Come on. All right, so I guess there's still the good news, and this is probably really good news, is they're still a long way away from pre-pandemic. So if you look at Q2 22, Q2 19, excuse me, they still are only 70% of that. So they've got some time. And here's how I'll model this. Let's assume they can equal Q3. I mean, they're not going to equal it maybe, but...
And the problem that I have with AMC is that they can't make it without going to shareholder. And it's evident within these 3 years. Dilution seems to be their game plan over here, right? But hey, so long as people are still putting money into the stock, thinking that it's going to be the same as GME, they might survive another year, maybe 2 years, right? But will it be indefinite? Probably not. But hey, do what you want. If you want to invest in this, it is you. It's on you. Okay, if you are all in either AMC or GME, you are a fool. All in any stocks, you are more than likely a fool. Okay. I understand that completely. Yes, I'm not completely all in GME, but if you have to pick all in on GME or all in on AMC, in my opinion, GME has a better chance, right? That's all I'm saying here. For my own portfolio, I've shared this before, so you could go back and look at it. But no, I'm not all in on GME. I have a majority position in GME right now, but I'm looking for a 5x, 10x from here, right? If the price appreciates to that point in a short period of time, I'm gonna shave some up and of course look into putting into a more stable one, right? But as far as the growth rate and all the growth of the company over the long term, I'm not gonna ever sell most of my position, right? It's just the price action that I'm looking for, to at least increase my portfolio on other stuff as well, right? But currently, yes, because I see the opportunity here much more than any other stock, retail stock, that they want you to buy into. Everything is overinflated in my opinion, right? Again, you're entitled to your opinion on this. At one point, I was foolishly putting my money all in to Bitcoin, because that's how I got my started. You said you got your started at AMC, right? I got my started at Bitcoin, and it paid off for me, right? But before I went all in, I did a lot of research on that. Because I got my feet wet back when I saw it was at $100 or so, right? But by then, I wasn't aware of it. Nobody expect Bitcoin to be this this valuation here. So it could be crazy, when people are betting against it, ignoring it for 10 years on end. You're going to see this reaction with GameStop as well. And that's my point in that, is that the negative sentiment about Bitcoin, if you ever look into the history of Bitcoin, it was like unfounded, right? Oh, it's a magic digital money and but people still believe in the network, of the Bitcoin. And it's a matter of generation here, right? Eventually, people are going to be a generational shopper at a GameStop, just like how, Amazon is building their generational shopper for Amazon as well, right? But it takes time to get to that point. And when you have a slow incremental change, I'm talking about the fundamental of the company here. I'm not talking about the price of the company. You would see something that is crazy, right? It's crazy because people just got in when it was, let me see. I was going to talk about SoFi. Remember when Roaring Kitty talked about GameStop, it was right here. But before that, he was building position at least 2 years before that, right? Around here, I think. And you said you don't know what his cost average is for Ryan Cohen. He bought in around here. And it's documented in the SEC website if you want to look into it. But I'm sure you know about him adding to his position around $22. Right here, $22. Was it, where was it? It was one of those days. But, so not most of his position. I think he bought, how many shares? How many $1 million? He bought some share at $22 a share. And when he started his position, I would wager his cost average maybe around $4, right? Give or take, right? But yeah, he's been adding. He's not selling. That's for sure. So, name a company out there that you buy at. Let's assume that his cost average is $4, right? Or let's even lower, right? Let's say $3. How about that? Just to be fair here, okay? So $3, if you say $3 a share, right? Right now it's $13 a share divided by 3. That's 4 times it is today, right? So name a company out there that you could buy into a share, and it's 3 times higher than the CEO out there. No. Like the CEO had a lower cost average, much lower in other company than GameStop. See what I mean? My point is that, it's still undervalued when it comes to CEO owning at a certain price point. So, and on top of that, he doesn't get any rewarded shares from the company. He denied it, right? So, yeah, so you said the cost average. Yeah, I mean, all in all, honestly, the company is doing well. Looks like there's no opposition here. I think that's all I have. Oh, okay, hold on. Let me finish his...
Probably really good
what
news
did he
is
say?
they're still a long way away from pre-pandemic. So if you look at Q2 22, Q1 19, 2400, 2560, make this, that, make this, that. So keep kind of recycling this. And what we'll do is I'll forecast revenue on the basis of kind of a renormalization. This is a weird way to do this, but does that make sense?
So this is, he's just trying to project ahead of time here, right?
So whatever the box office is, AMC has captured historically, excluding pandemic quarters, something like 55% of box office revenue. They can call that revenue for them. Okay. Film gross margin.
Okay. I think I looked at this before. So AMC, if you look at AMC right here. Expenses, interest right here. Interest expense.
Last quarter was much higher.
$370 million, right? But that's not the problem here. The problem is over here. Operating expenses is higher than the gross income. So that means the money that they are able to generate is lower than the interest in expenses for operating income. Oh, expenses, sorry. So the equivalent would be you have tons of credit card debt, in your personal life.
Doesn't make it a good stock. I mean,
And on top of that, you don't earn enough to cover your rent.
price now 17 or something.
So
Yeah, it's gonna be hard for them.
how are you going to survive?
Anyway, if you want to download that,
The only way to survive is to cut rent
save it on GitHub.
or cut expenses. But how can they do that when they have tons of
Share any kind of file. So
movie theaters that they are uncancelable?
This is what I think the market's going to do this year based upon what they're telling me they think is going to happen.
Oops.
Is that
Sorry, that was a terrible one. But anyway, so they have an uncancelable theater rent or whatever, or lease. And so the amount that they're losing last year was because of the interest payment. And if you look at the trend is up. Okay. And other expenses and income, so it sounds like this is another expenses as well. Income taxes, right? So yeah, I mean, how can they do that? How can they? Yes, they are able to increase their, but is it going to be enough? No. So what am I trying to say? So they will need at least $300 million from shareholder equity, right here, to even survive another year, right? But let me see. Okay, so at least they have cash here for that, right? So we'll see what they're doing with that. And this is what Morenz was saying. So far, okay, Adam Aaron retaining loss of $8 billion. Okay. How long has Adam Aaron been in the company? 16 years, right? Something like that. So, yeah. He's been losing this money, this company money. And for some reason, how is this being traded as if like it's something, Oof. Yeah, I don't get it. This is the asset that they're coming after here too. So I'm sure they're going to try to deplete that as much as they can. Yeah. Ridiculous. Look at the debt. Long-term debt of $8.6 billion. No wonder their interest is higher. You can't pay this off quick enough. Again, unless somebody bought in with the debt looming like that, and rebrand it and cut down stores and all that stuff too, just like GameStop. But again, it's too late. It's too late for this. Who knows? Maybe there are people still investing in this and hoping, crossing fingers. Keep in mind, this is 40 cents. Okay, 40 cents. Thank you for putting in the work. I wish you nice upcoming weeks. Be more. God bless. Thank you. Appreciate you, Uncle Eric. Yeah. All right. I am going to end the stream if there's no any more opposition. It's been almost 2 hours. Speak now or forever hold your peace. Okay. Oh, okay. Very good. Short interest is 22. So, one of the things that I was looking at here, let's look at this real quick. Institutional ownership, right? Have they been increasing in holdings for this company? I don't know, but I think I've shown this before, right? So if you look at, so we have an owner, institutional ownership. 7 of them is shorting only, right? 25 is long versus short, so they're long and then shorts, right? So these people are going to have to close their short position and go long, right? And eventually, you're only going to have these people who are shorting only. Percent change, it seems like 4% there. I think that means like 4% of the float. Or 4% of the position here. Okay, long chain. Institutional shares, 30% right here. So it looks like, you know, if you look at, now these are different website here. If you look at this one right here. Institutional ownership from this particular website, it says 29, right? But for this one, it says 31%. 3 million shares being added, it seemed, right? 1.6 value. Okay, so net buying, if you look at that little tick there, it seems like it's increasing a little bit, tiny little bit of an increment change, right? So that's probably representing 4% there. Hey, you know, any increase is good. At least they're, again, my thesis is that they're slowly increasing their position, slowly. Now, that's good for the investor, obviously. You just have to be patient, buy whenever you can, right? But again, only if you believe in the long-term growth of this company. Don't buy into it before you know what's going on in the balance sheets of the company. Leadership, you know, you look at, you know, the prospect of, like, again, like all the short squeeze and all that stuff, that's a cake on top, like Miranda saying. So just be diligent and following the company fundamental, right? And the only way that you could do this is to follow the earnings report every single quarter. Each company has a earnings report, right? Now let me finish off this particular one right here, so that you understand the sentiment of these media type, okay? And this is kind of indicative of what's going on, is that they don't want you to do this right here. Here, let me finish this out.
Yeah, George, there's some serious issues that are very evident to see. You don't even have to frankly do much digging into the fundamental story, but I do hope that
so you don't have to do much digging. It's just a serious issue, really. So don't look at the fundamental, just trust us to say that it's shitty company, and don't look into it, because if you look into it, you might find that it's actually not a shitty company at all. Okay? You might find that, oh shoot, they're actually improving. And even the guy said, hey, the balance sheet is not the problem. And she's still, oh, there's some serious issue with this. Now, okay, so the growth of revenue will come eventually, okay? Like I said before, it's not a serious issue here. If that's the only challenge that GameStop has, it's one challenge less than they used to have before. So what do they used to have? It's balance issue, right? Balance sheets issue. Now they have resolved that balance sheet issue already. We're about to solve the revenue, right? So increase in revenue, it's very easy to do. And I'm sure, again, we're doing it slowly, and we're not going to do a 5x of revenue in 1 year here. So it might be around 2 or 3% here and there, but slowly without adding more stress to the company. And then this is the video that I did 4 months ago. And the price of GameStop is somewhat the same. Okay. Now, it's worth noted that back then, the company was in a worse shape than it is today. So the company has improved since then, but the price is still the same. So it's worth noted that, again, price really doesn't matter, right? It fluctuates. But let's listen in, and I will end it here. Hold on, let me see. Which one?
That's like super important because spending $6,000, $30,000 a month on a particular data stream is a significant expense. And that's like quant funds, they have to spend that money to get that data so that they can process it, especially HFT firms. All right, what was your question again? Sorry?
No, I didn't have a question. It was just saying, I think we're about to come full circle. Anyway, Scott, I feel...
So, yeah, there's a lot to unpack there. Of course, he touched on the fact that we're in the best trade of our lives, right? And I truly feel that because, again, like being able to determine what happened before it happened is exciting, right? Now, I might jump in a little bit too early for me, right? But I don't regret that, buying it at, what at the time, $40 a share or even a little bit higher, and then coming down. As it comes down, you get to add at this price point too. So it's not a big deal to me because I could accumulate more at the very low price here. And so, my cost average is going to be a lot lower than my previous purchase at $40, right? But, so living the trade, he mentioned the fact that you should live your trade, right? You know exactly what this company is doing, how much money they bring in, every single year, every single quarter, every, investigating what are they doing with all of the money that they got, the fact that they, choose to invest in the company, you could see that on the balance sheets. And that's why it's so important to learn how to read the balance sheets so that you're not being fooled by these type of news coming along saying that, oh, meme stock is not going to move, meme stock fad has finally washed out, stuff like that is going to deter you from the greatest investment of your life, right? And they do that for a reason. They do that so that you don't get to experience the growth of the company. And just like this gentleman was saying, every single share that you buy into GameStop, you're going to get cash, and why do I say that? Well, there's so many other things that you have to understand when you buy into a company. And that, I always point out shareholder equity. This is the most important one, but people don't really realize it because they just focus on the net income. Yes, net income is also important because that's what is going to add on to shareholder equity, right? So the more money they make on the net income basis, retaining earnings, whatever this one right here, retaining earnings is also important as well. So the more they retain those earnings, it's going to get added back to shareholder equity. So these type of movement of assets from one part to another is important to understand, right? So that, when you see stuff like this, you don't get deterred. Because, what are they using this $250 million to do? What are they using this $300 million to do? So every single dollar of this company get utilized, in a different way. And I think Ryan Cohen, it's the leadership, Alan Adel, Larry Chang, these people already been demonstrated that they could do it, right? Now, can they replicate it? I don't know. That's remained to be seen, but I'm willing to invest in them because I believe in the leadership, because I believe in the company, because I believe in the industry itself, right? And so, now, if you don't believe in all of that, then of course, go ahead, short it. But just like this gentleman was saying, you have to pay interest on the short position. So go ahead, short it. If you have the ability to short it, don't close your position. Don't. And you see, in the long term, when we post a positive quarter, they're going to say, oh, it's only one quarter of positive, right? They're going to try to find something to say about this company that will deter you from from owning this company, even though they've been beating expectation left and right for 3 consecutive quarters already, especially on the earnings per share, right, which is the most important metric as well, earnings per share. Now, as far as the top line revenue, I think it's not as important because you could also cut your way down so much that you're going to be infinitely more profitable just by cutting costs and utilize every single dollar to do wonder for the company in the future, right? And it's going to be a slow growth. I'm not going to say that it's going to be like hundreds of gazillions of dollars every quarter, but a sure growth. If you know that the company could grow 5% every quarter, rather than, $100 million here, $100 million loss, $200 million gain, so the sporadic nature of growth, is not warranted, right? You don't want to see that sporadic growth. You want to see a consistent basis of growth in a company. It just makes you, stomach it a lot better, right? But anyway, I hope it makes sense. But that was just a short clip, and that's all I have for this video. Thank you for watching. Okay, bye.